Thank you for joining us, Mr. Soros.
Pleasure.
How do you judge the state of the world economy? Has the world recovered from the crisis of 2007, 2008?
Well, certainly the financial markets have regained their composure, so they're beginning to function again. And also, the world economy has overcome the shock that it has suffered, because for a while everything froze, and now it's sort of things are moving again. So there is a rebound, but I think that the effects of the crisis will be a long time for the world to absorb, and the main source of problem is in the United States, because this is where consumers have spent more than they earned for a period of 25 years, where we have accumulated current account deficit that reached 6.5% at its peak, which actually could have continued because there were other countries, particularly China and the Asian tigers, that were very happy to run a continuous surplus and to finance our deficit. So that could have actually continued, but the households became overly indebted, and the U.S. consumer, that accounts for 70% of the U.S. economy, has to cut down. And that will take a while. And then also you've got the banking system that basically was bankrupt at its at the bottom, has to earn its way out of a hole. And it's again, it's happening at a pretty fast clip, because banks can borrow at zero, and by government, 10-year government bonds yielding 3.5%, and that's a pretty fast rate of earnings for no risk. So they'll earn their way out of a hole, but it will also take time. And then there's still the whole area of commercial real estate where the losses have not been recognized. So the source of weakness in the world will be mainly in the U.S. consumer spending and in the, let's say, the decline in the banking sector.
And is that weakness in the U.S. sufficiently grave that there could be a W-shaped recovery, that there could be another dip downwards?
Yes. Well, I think certainly there could be another dip in the stock market, because right now we are sort of enjoying the confidence multiplier, and if there's a sort of a hope that this is a crisis like the previous ones, and we will just sort of recover in a V-shape recovery. So when that hope is not fulfilled, I think there could
Which you are certain it will not be fulfilled.
Well, I can't see it being fulfilled. Now, I may be wrong. I've been wrong before, but I just don't see where the growth in the U.S. economy can come from.
Given this continued weakness in the U.S. economy, are people right to start to be concerned about the dollar?
Well, they are, of course, and the dollar is a very weak currency, except for all the others. So there is a general sort of lack of confidence in currencies, and a move away from currencies into real assets. The Chinese are continuing to run a big trade surplus, and they're still accumulating assets, and basically the renminbi is permanently undervalued because it's tied to the dollar. There is a diversification from assets that normally held by central banks into other assets, especially in the area of commodities. So there is a push in gold. There's a strength in oil, and that is in a way a flight from currencies.
Is there going to be sort of a tipping point, a moment at which the dollar is fatally weakened, or does it just sort of carry on?
Well, it's difficult as long as as long as the renminbi is tied to the dollar. I don't see how the decline in the dollar can go too far. Now, of course, to some extent, it's very helpful because with the U.S. consumers saving more and spending less, exports can be a way for the U.S. economy to be balanced. So an orderly decline of the dollar is actually desirable.
Does it at some point need also to decline against the renminbi? Does there need to be some sort of a new global currency deal?
Yes. No, I believe that basically the system is broke and needs to be reconstituted. We cannot afford to have the kind of chronic and mounting imbalances in international finance. So you need a new currency system, and actually the special drawing rights do give you the makings of a system. And I think it's ill-considered on the part of the United States to resist the wider use of special drawing rights. They could be very, very useful now when you have a global shortfall of demand. You could actually internationally create currency through special drawing rights. And this is, we've done it. We issued $250 billion. And that's a very, very useful step, except the rich countries don't actually need the additional reserves. So all they can do is put it in the shop window and say, we've got that much extra, but they can't actually use it. Now, I think it could be used. It could be used to provide global public goods. The rich countries could put their allocations in escrow. The problem is that there is a cost to using SDRs. It's a very small cost at the moment. It's only less than 0.5%, but still is a cost. So somebody has to pay it. And I think we have actually the means to do it because the IMF has very large gold reserves and kept in the books at a very low price. And it has been decided to use those gold reserves to the benefit of the least developed countries. So the IMF could actually pick up the cost of paying for the special drawing rights.
Using its gold reserves.
And in fact it's being done. It hasn't gotten any publicity. But I understand that in Istanbul a deal was signed where I think the UK and France actually transferred $2 billion of their SDRs, or $2 billion worth, or 2 billion SDR worth, or to the least developed countries, and the IMF picks up the cost. So it's a road that's already being used, and it could be used on a larger scale.
What sort of a financial deal should Obama be seeking to strike when he travels to China next month?
No, I think this would be the time, because you really need to bring China into the creation of a new world order, financial world order. They are kind of reluctant members of the IMF. They play along, but they don't make much of a contribution because it's not their institution. Their share is not commensurate. Their voting rights are not